Hello. Today is Sunday, August 23rd, 2026. Here is your daily signal. According to Fortune, U.S. Treasury Secretary Janet Yellen's expanded interventionist approach, including recent bond buybacks and yen purchases, marks the most activist Treasury posture seen in decades, though some analysts like ING warn it may merely be rearranging deck chairs on the Titanic given the $40 trillion national debt. The U.S. Treasury manages federal finances, routinely issuing debt to fund government operations, and ongoing interventions over the past years aim to maintain liquidity and control interest rates, with these actions designed to stabilize both domestic and global financial markets and support investor confidence. On August 22, Bloomberg reported that the Treasury conducted a $40 billion bond auction amid heightened volatility, while Reuters noted that Yellen announced temporary repurchase operations targeting liquidity shortages in the overnight repo market. The Wall Street Journal revealed that S&P has maintained the U.S.'s AA+ credit rating following these interventions. In the near term, such Treasury actions may calm market volatility and reduce short-term borrowing costs, while persistent interventions risk increasing reliance on government support, possibly heightening systemic risks in the medium term. If frequent interventions continue, global investors may reassess their exposure to U.S. debt, which could affect dollar dominance and trigger further credit rating actions with direct implications for global portfolios. Next, onto U.S. retail sector shifts. As Fortune reports, Walmart's sales growth has fallen to a 6-year low as middle American shoppers go on strike, while Target is enjoying its second comeback quarter thanks to nearly $1 billion in Trump tariff refunds, and Klarna is signaling ambitions for Wall Street credibility with plans for its next CFO in New York. U.S. retail has faced persistent inflation and evolving consumer habits since 2022, compounded by intensified investor migration, especially after major bankruptcies like Rite Aid and Bed Bath & Beyond last year. Volatility has further increased with rising interest rates and the proliferation of e-commerce, alongside ongoing supply chain disruptions and labor shortages elevating operational costs. CNBC detailed Walmart's Q2 earnings exceeding expectations by leveraging strong grocery sales and strategic pricing. Reuters confirmed Amazon's marketplace saw 7% year-over-year sales growth with renewed investor confidence, and Bloomberg pointed to Simon Property Group's renewed leasing activity in urban malls, offsetting previous declines. Near-term, continued consolidation is expected among weaker brick-and-mortar retailers as inflationary pressure persists, and investor migration toward online and hybrid retail models may drive capital outflows from traditional retail spaces. Medium-term, urban retail property values may stabilize as adaptive reuse drives renewed leasing, but retail employment volatility could increase as automation and e-commerce investment accelerate. Moving on to changes in cybersecurity leadership and innovation. Next, Big Future reports that former Ping Identity and CyberArk executives have joined AppViewX to help scale machine and agent identity security, underscoring the significance of executive leadership changes for cybersecurity platform innovation and scaling. Leadership changes in cybersecurity platforms directly impact product innovation timelines, operational strategies, and stakeholder coordination. This sector often sees acceleration or pivots in technology roadmaps as new executives come aboard, which can rapidly alter market share. Recent industry research confirms that CEO turnover typically correlates with a 15% change in R&D outputs within the first year, and innovation scaling is regularly linked to executive vision, investment allocation, and talent retention. Security Week announced that on August 23, CrowdStrike named Michael Sentonas as their new CEO, signaling a focus on AI-driven cybersecurity innovation, while Cyber Magazine highlighted Palo Alto Networks CTO Nir Zuk's departure, which will likely affect its cloud security scaling plans. Near-term, leadership shifts may disrupt ongoing product launches and slow platform integration for enterprise customers, while in the medium term, strategic pivots led by new executives could boost R&D spending by up to 20%, accelerating innovation yet introducing new operational risks. Talent turnover following executive changes may impact team cohesion and lead to delays in platform scaling initiatives. Now, onto the markets. International markets moved higher, with Germany's EWG climbing to 44.2 and Belgium also showing strength near 27.655. France, United Kingdom, and Italy posted modest gains, while Spain achieved a notable daily improvement and Chile surged, outperforming other Latin American peers. In Asia, China large cap edged up, while India and Taiwan saw small positives. Hong Kong and Indonesia showed the strongest momentum among the region. Commodities were mixed. Gold rose to $423.36 per GLD and silver had a strong gain to $62.72 on SLV, while platinum climbed significantly. U.S. oil was flat at $134.64, and agriculture edged lower despite corn's advance. Uranium and lithium were standouts, with URA and LIT posting double-digit monthly strength. Among sector ETFs, the S&P 500 moved up to 765.72 with finance up and healthcare gaining, while semiconductors slipped, led by stocks. Real estate was unchanged, rate trended slightly downward, and transportation advanced modestly, supported by agricultural sector's climb. In the favorites list, Microsoft advanced to $483.24, Oracle saw an uptrend, and Axon surged to $627.75, while Nvidia closed slightly lower and AMD declined further. Amazon ticked down while Apple retreated, and Intel dropped notably. Among individual movers, RF Acquisition Corp Roman 2 RFI led U.S. gainers, up 226%, while Megan Holdings MGN posted the steepest loss, falling nearly 98%. That's it for today. You can find more news and details on our website. Goodbye.